we go. The sound is off. Cool. So anyway, we are recording the session. Nonetheless, so like we did say, we're going to be speaking a little bit about nature's theory, but we're going to be going back to the basics, right? So I feel like before we start off with nature's theory, we need to discuss why do we look at nature's theory in the first place? Why is it important? Why are we looking at this? Or why are we using this tool to make sense of the information that the market is giving us in the first place? Why in the first place? Because we always need to go back. That's kind of why a lot of people don't have successful systems, or a lot of traders can't find consistency with a process that they've just learned from someone else, because there is no element of why. So when we're sharing things like this, let's go into the whys so that, yeah, you guys are clear. You guys can move forward. So anyway, let's go into the why. So first thing, why we're looking at nature's theory. Obviously, we know that market is only consistent of two things, right? Only two participants, right? There's either going to be someone that's buying, or there's going to be someone that's selling. Now, for us to discuss why nature's theory is important, we need to talk about these two people, because these two people are the people that are moving the market either up or moving the market down. These are the people that are forming the nature, that are creating an environment in the market. Whatever the environment is, whatever the market conditions are, it's these people that are responsible for those conditions, or for that environment. So we need to go into them. So conclusion, or not conclusion, but moving forward, we've got buyers, right? We've got sellers. These two people are both making decisions. Now, when someone is buying, obviously they're buying from someone else that is selling. So indirectly, we understand that there can't exist a buyer without there existing a seller on the other end of the market, right? Markets, at any point in time, the point of there being a market, the reason why this, let's even draw and be very specific, and we'll make some sort of a house, and we'll call, who's here in the building? I see Subs there in the building. We'll call this Subs' Boerewoord stand. Subs' Boerewoord stand. Subs got a Boerewoord stand, and then as well as me, myself, T.Mayne, I've got a Boerewoord stand here. We are right next to each other. We're busy competing for customers, right? Already, let's just say for whatever reason, there's still going to be a buyer and there's still going to be a seller. In this case, Subs is a seller, I'm a seller. A buyer maybe would be a consumer. Now let's also bring in I don't know if you guys know this theory about the efficient market hypothesis, that whole theory about that markets are efficient. Yes, I do think I agree with that theory that markets are efficient, but I don't think that they are always efficient. I feel like markets are always striving to be efficient, in a sense that the reason why Subs opened a Boerewoord stand and the reason why I opened a Boerewoord stand is because I have Boerewoords and I want to give Boerewoords to someone that wants Boerewoords. The point of a market is to connect buyers and sellers, right? These buyers and sellers eventually form the environment, whatever selling environment or buy, whatever market environment this is. Cool. So for whatever reason, let's just say, who else is here in the building? I see Kopano there in the building. Kopano is here. Kopano is an individual. For whatever reason, Kopano could have any reason in the world to buy from Subs. Maybe Subs is just on the way home from wherever, from Kopano's workplace to Kopano's home, or whatever the case is. Maybe Subs' Boerewoord stand is just on the way home, and that's why this guy chooses to buy there. A human being will have thousands and millions of reasons why they will decide to buy or why they will decide to sell something. It's not always because something is cheap, not always because something is expensive. Maybe Subs has better quality than me. Maybe Subs has better quantity than me. For the price, maybe his price is better than mine. There could be thousands of reasons why Kopano chooses to go to Subs. Now, obviously, because there's a market, we're going to compete. Eventually, there's going to be this whole thing of competition. Now we're bringing in another thing, that at any point in time, buyers are in competition with other buyers. Let it sink in. Buyers are in competition with other buyers. Sellers are in competition with other sellers. It means that if I am able to sell something at a more expensive price, I will end up so much better as a stupid seller that sells something at a cheap price. Doesn't it make obvious, very obvious sense in normal life and as well as in the market itself? Cool. We're moving forward, we're making progress, and we're doing this progress as simple as possible. Anyway, let's continue with our example. Now, Kopano, for whatever reason, is buying from subs. I'm not happy because I'm not getting enough customers. Kopano also put all of his friends on. They all go and eat by Subs' place. Subs is drying the market. I'm not selling to anyone. I'm not able to sell to anyone. So what do? I instead decide that, okay, Subs is only selling Borovors. Me, I'm going to add diversity because there's a lot of reasons why someone would want to buy something for in this particular market. People, yes, we can say that maybe we can assume that maybe people are rational. We're all rational human beings. We can decide, we can say 1 + 1 is 2. We're rational human beings. But when it comes down to decision making and buying things, I can promise you that put a rational person in front of me, and I can show you that that rational person can make an irrational decision. What is rational and what is irrational? Those definitions are very subjective. What's rational to me might not be rational to you. I might think drinking alcohol. I'm just saying this is not alcohol, guys. It's water. I put water inside alcohol bottles because it just freezes nicely and it just stays cool. I know no one can drink alcohol like that. It's not alcohol, it's water. And I don't know why I decided to cough just after I drank it. But otherwise, just saying that, I don't know why I even digressed. I forgot where I was going with this. But I got a nice water break. Otherwise, let's just say I'm going to add diversity there, right? So because I'm adding diversity, I'm introducing competition. Obviously, a competition with who? Someone that's doing the exact same thing that as me. Someone that is also looking to sell something. Yeah, hey? I am sick as well. That's why I'm drinking a whole lot of water, guys. That's why I'm drinking a whole lot of water. Already today, I'm almost done a full liter of water. Otherwise, I'm introducing competition into this whole thing, right? So I decide I'm going to sell Wors and I'm going to sell some steak or whatever the case is. Cool, I'm doing something. Nonetheless, let's go into what this person, so cool. Now let's kind of forget about maybe our example just for 1 second. We understand that there's buyers, there's sellers. Why this person would want to do something can be any reason. Why this person would want to sell something could be because of any reason. We will never know the reason why a buyer is buying. We'll never know the reason why a seller is selling. But buyers are in competition with other buyers. I want to buy something cheaper than you bought it because I want the same value for cheaper. Don't we all? And sellers are competing with other sellers to sell things for more expensive prices to make more money off whatever they're selling. Cool. We understand that there's competition as well. Now let's go back to the market, right? When someone decides to buy something, obviously prices are going up. Now let's go back to this example and we'll say that for some reason, Kopano is buying a whole lot by subs. Subs is always got low on stock or whatever the case is because Kopano, all of Kopano's friends are coming to subs' place. Indirectly, prices eventually go up because what is happening to the supply? The supply of whatever's there, whatever's existing is becoming more and more scarce because more people are buying it. So obviously, what is market trying to do? Why is market going up when someone is buying something? Why is the price becoming more expensive when a lot of people are buying stuff? Is because the market is searching, because remember that we said that the markets are always trying to be efficient. The markets always want there to be both buyers and sellers. That's why we spend 25,000 hours in a consolidation and we can spend 1 minute in an impulse because the market loves an area where there's both buyers and sellers and hates an area where there's an imbalance, where there's only buyers. Cool, we've established that. Right, let's go back to the example. I'm buying in the market. When I say that I'm buying something, I buy whatever contract of whatever I'm buying, and I'm holding this order because remember that what we're buying and we're selling, we're not buying and selling actual physical stuff. We're buying and selling something that's digital. Cool. But anyway, we're buying and we're holding this position. We're holding onto this position. When my position closes, I am selling it back to whoever. Doesn't have to be the same person that I bought it from, but I'm selling it back to the market. So whatever I bought, if I bought it for 10 Rand and price went up and I close my position and it's at 20 Rand, I am selling whatever I bought back to the market to whichever person is deciding that 20 Rand is a good value to sell this asset. Because remember, we already established that if there is a buyer, buyers can't buy, oh, sorry, the buyers are down here. Buyers cannot buy anything without someone that is selling it to them. So indirectly, there is always someone on the opposite end of that trade. So cool, you made money today, that means someone else lost money. Cool, you lost money today, that means someone else made money because there was obviously someone else on the opposite end of your position. Now let's go back to the market. Same thing with the selling. If a whole lot of people are selling something, that means that there's going to be a lot of supply. Me and Subs got a lot of boerewors in our, we have to get rid of stock. So because there's so much stock and not enough people buying it, what are we going to do? We're going to want to attract buyers somehow by doing what? Lowering prices. So obviously when people are selling something, a lot of sellers, why is market going down? Market is going down to find an area, because remember that there's always price. Everything has got to do with price. Something was 20 Rand and no one was willing to buy it at 20 Rand. And all these sellers are there. A whole bunch of sellers are pushing the price down because there's a whole lot of supply, or whatever the case is. Whether you want to use all these fancy terms, supply and demand, or whatever the case is, the understanding will always just be the same. That if prices go down, eventually everyone has a price. Whether that price is 5 Rand, whether that price is 0 Rand. If price goes low enough, there's going to be someone that is going to be willing to buy at that price. And obviously, at a point where there are more buyers than sellers, price will then reverse, because now there is demand for this particular thing. There are more buyers involved in the market than there are sellers. Now, obviously, we had to speak about this. Yes, we are speaking about nature's theory. I haven't lost the plot, but we had to speak about this because I want to show you that these are the things, this is what is causing every single thing that we are seeing on the chart, is the decisions that are being made by only two people. A buyer can cause the market to go up. A buyer can cause the market to go down by exiting a buy. So that means that a whole lot of buyers can cause market to go up or down. A whole lot of sellers can cause market to go down or up. Whether the market is going up or down, we will never know, or we can assume. Obviously, there's tools that we can use to assume whether we think that there are buyers involved in that move or there are sellers involved in that move. Obviously, like for example, our theory maybe would tell us that if market is trending down, what are these retracements? These retracements could be sellers exiting their buy positions, taking profits. That's probably the reason why market is going up. Is our prices still, are there more buyers involved in this market than there are sellers? No, there's clearly still more sellers involved in this market, because wherever the buy started happening, wherever the buyers started coming in, whether it was sellers closing positions or new buyers coming in, the sellers that jumped in again, obviously there was someone that sold up here, right? There was another person that sold down here. Whoever sold here, there was still more of the people that sold even lower than the previous people that sold, that were more than the amount of buyers that came into the market there, because obviously price action broke that low. So we obviously, the theory would then, we can assume with our theory whether we want to assume that there's more buyers involved in this market or there's more sellers involved in this market. But point being is that whether market is going up or down, buyer can do that both directions. The buyer can make market go up by entering the buy. Buyer can make market go down by exiting that buy. Cool. Let's delete some stuff here just so that we've got some space to continue as we go a little bit deeper. Cool. Yeah, I think that's enough to erase. Cool. So let's go into some nature's theory, right? We already discussed that buyers and sellers are doing everything. They're showing us what's going on. They're controlling what's happening. What we see, everything we see is their decisions. Ultimately, what was there? Were there more buyers or were there more sellers over a specific period of time? That's what we're seeing in the market. Now, when we go into our theories, like we said in the other psychology sessions and all those things, that the market is built up, right? Primary way that we're shown information is via candlestick. A whole lot of candlesticks will eventually give us some structure. A whole lot of structures will eventually give us some chart patterns. Cool. We've already established this. So now we know that we'll see what a buyer or a seller is doing by what is happening on the chart. Now, nature's theory is not specific to any one thing. Like I'm not going to say chart patterns is nature's theory, or support and resistance is nature's theory, or candlestick theory is nature's theory. It's all nature's theory because it's all showing me the result, the final result of the decisions made between buyers and sellers. That is nature's theory. So what are we saying when we go back to things like entering or looking for points of interest or directional biases? I hope you guys can see the information is there. Whether we're looking to enter, looking for points of interest, or we're looking for directional biases. If we're able to use our simple theory, chart patterns are as much as, yes, maybe an ascending structure, we've got theory that tells us ascending structures break to the bottom. What is an ascending structure showing us? An ascending structure is showing us that, okay, cool, price action is moving up. This is an uptrend, but what's the nature of the uptrend? Maybe every resistance in the uptrend is being broken above and broken below, not being broken above and being respected as support and price action continuing, but maybe we're seeing price action breaking back below. What is that showing us? That's showing us that whoever sold from here, maybe they're still there. Why? Because everything is price related. Everything is relative price on the right-hand side. Cool. We know that at this price, whether this price was 10 Rand or whether this price was 20 Rand or whatever the price was, US 30, Dow Jones, doesn't matter. If there were sellers that sold at 20 Rand and price comes back below 20 Rand, whose market was this previously? This was a seller's market. This was an area or a region, price region, where sellers found interest or where sellers were interested. If the buyers are not able to keep price above an area where sellers are going to see interest, then it means that there are still sellers involved. Otherwise, let me not, I was going to say, I was going to complicate things a hell of a lot, but let me not do that. Cool. So we're going back to the basics and just discussing. First, we were making it clear why nature's theory is important. Now I feel like let's go into what nature's theory is. All nature's theory is me understanding the environment that I'm trading in. When I learned a chart pattern, I learned that a chart pattern maybe gives me a specific outcome. Maybe there's a general outcome. When I see a double bottom, price is probably going to move to the upside. What is this? This is an environment. This is an environment of buyers coming into the market, sellers coming into the market, and buyers not, or rather sellers, first of all, not being able to push prices below where the previous buyers came into the market. And eventually, the new buyers that are coming into the market, way more than the amount of sellers that came in there. That's why we've got a breakup structure. This double bottom is showing me an environment. Support and resistance, whether it's a point of interest, whether I'm trading. Okay, cool. Let's just first of all discuss the difference between support and resistance and supply and demand. Supply and demand is one level. One swing high, this is a level of supply. Once this swing high gets tested multiple times, it then becomes resistance. We've understood the difference between the two. Whether I isolate points of interest using supply and demand, obviously if I'm using supply and demand, I'm not expecting price action to violate this high. If I'm using support and resistance, then I am expecting that price can violate this high, but should not, or should basically react or reject from this area, because it's no longer the specific price point, but it's now an entire zone that I'm looking at. It's now a level of resistance. It's not a specific area of supply or specific area of demand. Cool. We understood the difference. But nonetheless, whether I'm looking at points of interest as support or resistance or supply and demand, I'm looking at an environment. What is the environment I'm talking about? Well, if I trade supply and demand, I'm saying that I want to trade in an environment where I see a whole bunch of sellers, for example, in this case, coming into the market. And these sellers that came into the market should be more than the amount of buyers that came in. When price comes back, I expect maybe to see that these sellers might still be interested in selling again, or whatever the case is. That is me saying that I'm looking for this environment. So it's not so much that I'm trading theory. I'm not in my trading journey. Okay, cool. Yes, in the beginning of my trading journey, I had to concentrate on the theory. I had to focus on learning what a double bottom looks like, this, that. But eventually, once you get the over, because obviously I'm sure you guys have seen that not every double bottom looks the same. Not every double bottom looks even remotely. Some double bottoms don't even look like a double bottom. But if you've got a criteria, maybe for example, if you're looking for an environment, you would still recognize that structure as a double bottom because you're no longer looking at the theory, but now you're looking at trading a specific environment now. Cool. Whether I'm looking for now let's move on from points of interest to our entry criteria. Whether I'm looking at maybe a bullish engulfing candlestick as my entry criteria, these are the kind of candlesticks that I use, or I'm looking at a pin or maybe a bullish pin bar as my entry criteria. Yes, I had to have in my trading journey have gone to the fact that, okay, baby pips or forex chasers or whoever the hell is telling me that this, when I see a higher close, this is called a bullish engulfing. If maybe I see a wick that is more than 2 times the length of the body, then maybe, and there's no upper shadow or small upper shadow or upper wick or whatever you want to call it, whatever the English is. If there's a small one, maybe that this is a pin bar. Yes, I had to in my journey learn the language to obviously be able to communicate and to be able to effectively learn. Otherwise, how else am I going to see and put a label on what I'm doing? Yes, I had to learn the English, but eventually I'm going to throw away this English and then I'm going to see what is happening in this candlestick structure because I'm not trading bullish engulfing. I'm trading this environment. This environment is an environment that I want to enter in. When, for example, I see an ascending structure is giving me an environment that, oh, sellers are losing momentum. On top of this ascending structure, I see a double top. Oh, buyers are not able to push price action above a previous level of structure where I see sellers coming into the market. And oh, what is this telling me? This is telling me that the environment is not showing a lot of strength in the buyer. So obviously I'm expecting at some point sellers to come in. What am I seeing now? Now I'm seeing selling coming in. I'm seeing buying weakness, buyers failing to push prices above an area where sellers are coming into the market. I'm trading an environment. What else am I doing? I'm finding a bearish engulfing in this area at my second touch. I'm saying that in this overall environment, for me to make this decision to enter this market, I want to see sellers coming in with a whole lot of momentum. I want to see buyers, maybe that green candlestick being there. But when the sellers come in, I want to see the sellers being more aggressive, meaning that they must move price a lot more than the buyers have moved price. Because remember that maybe if I'm on a 5 minute, that means each candlestick is worth 5 minutes. So in 5 minutes, buyers were able to move candlestick 5 pips up. And in 5 minutes, sellers were able to move candlestick 15 pips down. That just means that sellers came in a whole lot more aggressively than the buyers came in. So yes, I had to have learned the language to be able to make sense of all of this. But at some point in time, I'm trading what is going on. The decisions being made by the buyers and the sellers. Because remember, we in the beginning, we said that subs and me are in competition. What competition are me and subs in? Me and subs are obviously, okay, in this stupid retail example, we're in competition for customers. But in the case of the market, the competition that's going on is that if, okay, we actually did mention it, right? If I'm a seller, in this case that we used, ascending structure, double top, bearish engulfing. If I am that seller, I want to be a smart seller, right? I want to sell high enough, because remember that if price is still going to move down, if price action is moving down, it means that there are more sell biased positions than there are bullish positions. If I sell at this double top structure and I expect to hit TP at the 90% rule here, and I hit TP at the 90% rule there, and I've been holding this whole position, and I'm so happy that I made money, that means that I won the competition. What competition did I win? I was a smart seller, and there were other stupid ass sellers that still decided that, remember that I sold at 20 bucks. If price kept on moving down all the way to 5 Rand, that means that there was still someone that was stupid enough to sell at 18 Rand. And there was still someone that was stupid enough to sell at 10 Rand. And there was still someone that was stupid enough to still sell this asset at 6 Rand, because price still moved from 6 Rand to 5 Rand. It means that the competition that I am in as a trader is I'm trying to compete. If I'm buying, I want to buy at the cheapest price possible. I want to buy at a price that's cheap enough that there will still be other people that are going to be stupid enough to buy after I've bought, to be able to send prices to where I expect my TP to be. That's kind of what I'm doing. If you think about what an institution is doing, or the people that make money, the hedge funds or the whoever, that's exactly the game that they play with us. They buy in an area where we are scared to buy, and they send prices up. And by the time we've seen that bullish engulfing on a 4-hour, they've already been in the market. And at that point, we are the retail that is still stupid enough to send prices higher so that they make money. What do I want to do as that retail? I want to do the same. I want to hop on to what they're doing, because I understand that they are trading a specific environment. They don't go into the trading day saying that, oh, we lost 500 billion yesterday, we have to make 500 billion back today. No. On their end, every single day is a new day. Why? Because whoever, remember that subs started, or Kopano started buying from subs, right? Kopano put his friends on to buy also from subs, because Kopano thought that subs is selling better Boerewors than me. Kopano, your taste buds are messy. And otherwise, Kopano put his friends on. That means that yesterday, Kopano was the only buyer here in subs' market. But today, there's a different buyer. Subs or Kopano has come now with a friend. So we do see that every single day, the environment is changing, because the stupid guy that blew his account yesterday doesn't have money to trade today. He's not there today. And so the environment that was there yesterday is completely different to the environment that is there today. And so when I'm there today, what is my objective? Because remember that we are saying that everything in the market is relative. The reason why I sold at resistance is because I saw other people selling at resistance. If I didn't see other people selling at resistance, if price just did this, what are the chances that I would have sold here if there was nothing here in the past that gave me a reason to sell? What are the chances that I would have sold there? I have no idea what the chances are, but the chances are a lot slimmer than if there was a reason for me to have sold at this area because of something else that had happened. So everything in the market is relative. And so when I'm coming into the market now and I'm looking at the overall environment, whether I'm a day trader or whether I'm a scalper, and I change my environment, or I update how often I change my environment on a session basis, as in I'm trading Asian session at this time, I'm trading whatever, or whether I'm a day trader and I update my bias, or I update my environment on a daily basis, as in every morning I'm doing analysis and updating and seeing how has market changed from yesterday and what can I do today to find trades, or whether I'm a swing trader updating my analysis on a week-to-week basis, or however long swing traders do it, doesn't really matter. But the point is that everything is relative, and I'm looking for an environment that is giving me a situation that will allow me to make money. What am I doing? My decision is based on what happened before. So basically, only reason why other people are selling is because they saw that there was a downtrend. Only the institution, only that person that had the money, only that person that had the volume was able to sell here and send prices down at this extremely ridiculous price or whatever. Because remember that price has been moving up all this time. price has been moving up all this time. Meaning that who in the world came in with so much money that was more than the buyers that have been in the uptrend for 6 weeks or for 6 months? Who in the world has that much money that was more than buyers that have been in the market for 6 months? It's only someone else. Us, we have to rely on the fact that everything else is relative. And for us to make a decision, we have to function off what we've seen in the past and make sense of that information. That's nature's theory. We're trying to work off what the banks are doing, because ultimately when we see price action moving up or down, yes, there might be retail involved, we might be involved, but ultimately we know that there's people that are trading with much more money than we have. And those people that are trading with a lot more money than we have are a lot smarter than we have. That's why they have a lot more money than we have. And because they're a lot more smarter, it means that their things are a lot more structured. And if their things are a lot more structured, that means that they have target objectives, they have rules that they work with, and all of those nice things. And that makes our job a lot more simpler, because all I need to do, I don't need to learn the English and say an ascending structure provides me this. I need to learn that English to be able to come into the market to make sense of the information. But once I've done that, my job as a trader is to make sense of it on my own. I don't need the English to tell me to sell. I don't need the English to tell me to buy. I don't need the fact that they call this a bearish engulfing, or they call this or whatever. Once I've understood that English, my job is just to make sense of, on a day-to-day basis, understand that when market is going up is because someone is buying, and when market is going down is because someone is selling. Who's in control who's in control for the day? Have buyers been in control? Is my assumption that buyers will continue to be in control? If buyers will continue to be in control, I want to find the cheapest place to buy. That's all I'm doing. Resistance, support, cheapest place to sell, cheapest place to buy. Nature's theory, we're 100% done. Let me go through those. I see there's seven things there in the chats there. And then we'll conclude the session, guys. Sure. I love Purabors. Awe. Nice to see you guys there. Nice to see you guys in the building. Always. You guys are representing. Please don't forget to share the recorded video since I joined late. Okay, I will upload this one. I'll upload on my own personal YouTube channel. Receiver cracked down on me. It was like, hey, don't upload things that are supposed to be on Forex Chaser's YouTube channel on your channel. So I'm just going to respect that. And this I'll just upload on my own personal channel. Yeah, cool. Since we are recording. Some double bottom, yes, I've seen that too. Yeah. They don't all look the same. And that's what the English is going to do. The English is going to make us look for something that's very specific. But if I understand an environment, then I'm not looking for something that looks like something that I saw yesterday. I'm looking for something that I understand. Do you see where the difference is? That's where that thing of when I copy paste the strategy and I'm faced with a specific environment, I don't know. I ask myself, what do I do now? Because this person didn't teach me what do I do in this environment. That's because there's no that understanding of really what's going on from that nature perspective. And I feel like those people that are really making money understand things from that kind of a perspective. They're not robots, and they're not just buying and selling whenever they see. Because me, I don't just sell every double top that I see. There's some double tops that I'll leave. I'll stay out of those happily. And there's some that I will add size on. And that's because of the experiential knowledge, because of that environment that I'm looking for. That maybe even now my trading, aside from the environment, now my trading maybe has become time sensitive, in a sense that I understand that, okay, cool, yes, buyers and sellers, but who really has the meat here? Who really has the money? Okay, don't the people in the US have the money? Okay, cool, they've got the money. So maybe if there's going to be some big moves, I want to trade alongside the US money. And so now maybe my trading is time sensitive to the fact that I'm trading New York session, or whatever the case is, or looking for my entries in New York. Cool. We're done, guys. There's like 1 minute, 23 seconds left. Let's end the session there. Call it a session, and then, yeah, I'll just upload this on YouTube. Cheers.